So today, we're going to break down a really fascinating scenario, the potential economic chain reaction that could be set off by a major conflict. Now, to be super clear, this isn't us making a prediction, not at all. We are simply walking through one specific infographic that maps out how a single domino falling could create this massive cascade across the entire US economy. Let's trace the path it lays out.
And this right here, this is our entire roadmap for this explainer. Every single step we're about to talk about comes directly from this one image. It lays out a very specific sequence of events, so let's jump right in and unpack the very first trigger it identifies.
So this is really the big question our source material is trying to answer. It's laying out a chain of logic, a sort of cause and effect, to show how a conflict far away could have very real, very tangible consequences right here at home. So let's follow that chain, starting with the very first link.
According to this analysis, the very first and most immediate impact isn't on the stock market, it's not on government spending, nope. It's on that one commodity that basically powers the entire global economy, oil. This is positioned as the very first domino to get knocked over.
And the source puts a pretty stark number on this initial shock. It projects that the price of oil could suddenly jump into a whole new range, $80 to $100.
Yeah, that's per barrel. And what's really interesting here is just the scale of that jump. We're not talking about a minor fluctuation. The infographic frames this as a major price shock that would be felt almost immediately. So how does a shock like that start to spread?
Well, where does it go from there? You know, a sudden spike in oil prices doesn't just happen in a bubble. The document argues it would kick off a pretty serious ripple effect, putting immediate pressure on the prices we all pay, and sending some serious shockwaves through the financial markets.
And this is where that abstract idea of inflation becomes very real, very fast for pretty much everyone. The infographic points directly to higher costs at the gas pump and, of course, for heating and cooling our homes. This is the point where these economic consequences really start to hit our wallets.
At the exact same time, the infographic outlines this classic market reaction to big-time uncertainty, what they call a flight to safety. So as you can see here, the idea is that investors start selling off riskier things like stocks, which would cause those prices to fall. And where does all that money go? Well, it flows into so-called safer havens, things like gold and U.S. Treasuries, which drives up demand and their prices in turn.
Okay, so we've seen the potential hit to consumer prices and the shaky financial markets. But then the infographic pivots to another huge piece of the puzzle, the direct cost that gets shouldered by the government itself.
And the first, and let's be honest, the most obvious financial impact highlighted in the document is a big surge in defense spending. I mean, a major conflict, just by its very nature, demands huge financial resources, right? So that leads to a direct and immediate spike in military costs.
Now here's the next crucial link in the chain. That huge increase in spending has a direct consequence. The infographic connects the dots for us, showing how higher military costs would almost certainly contribute to a growing federal deficit, which just adds another layer of strain on the whole economy.
All right, let's take a step back and pull all these different threads together. We've traced this path all the way from an oil shock to inflation to market volatility and a rising deficit. So the infographic then synthesizes all these things to paint this final big picture view of the economy's overall health. And the culmination of this entire chain reaction, as it's all laid out at the bottom of the infographic, is basically a triple whammy of economic challenges. First, you get slowing growth, because higher costs and all this uncertainty really drag on the economy. Second, tighter monetary policy. Think of central banks having to raise interest rates to fight that inflation. And third, just general financial instability, which is the result of all these pressures mixing together.
And there it is, quoted directly from the source. This is the ultimate economic outcome that's presented in this whole scenario, so it's not just one single problem, but this really challenging combination of slower growth, tougher financial conditions, and a pretty unstable economic environment.
So, as you can see, this one infographic lays out a clear and, let's be honest, a pretty sobering economic flowchart. It really connects the dots from a single barrel of oil all the way to the health of an entire nation's economy. And it leaves us with one final and, I think, crucial question. When we focus only on the numbers, on the dollars and cents, what are the true, unquantifiable costs we might be leaving out of the equation?